Namaste, welcome to Arthneeti, where we discuss money and money related tools to help you in your everyday investing decisions. I am Dr. Shifalika Gokhale. I hold a PhD in business practices of mutual fund houses. It is very important for us to be in the know of what is happening around us, not only domestically in India but across the globe. These events have significant impact on our investing decisions from significant moves in the global bond market to the impact of general elections. Let us discuss how these and more events shape our investing decisions in the months to come. The first news item that I want to discuss is come June, we are already in the month of June, JPMorgan Chase is going to include Indian bonds in its emerging market debt index. Now, this inclusion will prove significant for the Indian bond market. In September of last year, JP Morgan had announced that it would include Indian bonds in its emerging bond fund from June, where the weightage to the Indian bonds will be 10% of the total fund. Now, this fund currently has assets of nearly $206 billion. Assuming, right, what this news article says is that assuming 10% weightage is given to Indian bonds, a good 20 to 25 billion dollars of fresh inflows will come into Indian markets. What this inclusion will help to achieve is deepen the market liquidity and also increase the demand for Indian bonds. Increased demand could lead to increased prices. Now, the prices and the yields are inversely related. When the prices of bonds rise, the yield of those bonds reduces. So, with increased demand, which will lead to increased prices, the yield of these bonds will go down, thereby reducing the borrowing cost for Indian government and corporates. Also, increased inflow will have a positive impact on the Indian rupee, thereby again positively impacting the investment climate in the country. So, this inclusion of Indian bonds in the JP Morgan Global Index is a positive sign for Indian bond investors. The next important news item that I wanted to discuss was the US Federal Reserve meeting, the outcome of the Federal Reserve Committee meeting, which announced the outcomes on the 12th of June. Now, again, for since July 2023, US Fed has maintained the interest rates between the 5.25 to 5.50%. Now, this is the seventh straight time that the rates have remained unchanged. It was expected that the US Federal Reserve would announce at least 3 rate cuts this year, but in this meeting it was announced that the Federal Reserve was now looking for only 1 rate cut in this financial year. Any rate cut by the US Fed was a positive sign for global markets. Why? Because it would allow funds to flow out of the US into emerging markets like India. But with the US Federal Reserve maintaining its stance to keep the interest rates unchanged, uh, foreign portfolio investors bringing in money in India is also what can I say, is put on hold or will prove to be significantly lower until and unless these rate cuts are the rate cuts are announced by the Federal Reserve. Now, the US Federal Reserve was of the view that their long-term inflation target of 2% was still far-fetched, and that is why they are keeping these rates high since July 2023. Now, this will impact Indian stock markets, as I told you, as a low foreign portfolio investors, lower amount of money from foreign portfolio investors will flow into the stock markets because of this decision by the US Fed. The election results, which were not which were not the same as what the exit polls had predicted, significantly impacted the market. The markets saw a huge fall where Sensex fell by nearly 4,400 points and Nifty touched 21,800 levels. Now, this was expected as after the exit polls were announced, the market had risen significantly given that there would be stability and Modi would be elected unopposed in his third term. But what actually happened was that the BJP, Modi-led BJP party, did not even secure the halfway majority mark, and they had to rely on their alliance partners to form the government. Now, any form of instability does not go well with the markets, which was seen in the fall or in the markets following the announcement of the results. Also, it saw the jump in the volatility index to its highest since March 2022 at 29.79. So, with the election results not as per expectations, the volatility index, which is significant when it comes to investing decisions, was at an all-time high. But again, this market volatility and the market downturn are short-term phenomena, and since all of us know that Modi has sworn in as the prime minister for the third time and majority of his cabinet is retained, which will see continuity and stability in the policy stance of the government, the markets will surely react positively to these signs. So any downfall in the market was a short term volatility phenomena. AMFI publishes data for the performance and inflows in various mutual fund schemes for every month. Now, for their data for the month of May 2024 reveals that sectoral or thematic funds have garnered the highest inflows in equity mutual fund schemes. An amount of nearly 19,200 crores was put into sectoral and thematic funds. Now, sectoral funds, which are funds which concentrate on specific sectors, say like manufacturing, services, or technology, medical sector, so on and so forth. Thematic funds are broader than sectoral funds, where they concentrate on specific themes like the aging population, or the energy transformation, or environment, and so on. So, sectoral funds are narrower as compared to thematic funds, but both these fund categories saw huge inflows, surpassing all other kinds of equity funds for the month of May. In the same news item, the report card for sectoral and thematic funds was also given. Now, various themes like banking and financial services, which saw negative returns in the month of May, whereas themes like infrastructure saw a positive return. Themes like energy and power also saw positive returns in the month of May. So the report card was also given in the same news item. These were some of the news items which would have the capacity to impact our investing decisions. So, this short video and the short description that I gave you about the news items, hope you have added some value when it comes to taking decisions about where to invest your money. And I keep on posting videos every Friday about happenings during the week which could impact our investing. Now, if you have any questions or if you want to discuss any particular news item further, please feel free to write in the comments box, and I would be happy to discuss on that item in detail. So, I hope you have a good weekend and stay safe until we meet next time. Goodbye.